Thanks very much. We're fortunate this morning to have someone from the European Commission here who might be able to talk about the EU's approach to financial services in non-EU markets, maybe perhaps the proposed trade deal with the US or other things like that. Would love to get your thoughts.
Well, thank you very much, and thank you for the Council for having me here. I'll take the context a little bit wider, and because many of you have already said trade is part of the solution, link up to the rest of the world where the growth is, take a helping hand, as Mr. Weber has said, from neighbors and other friends. And that's exactly what we're trying to do in DG Trade. I'd like to point out that we're not sitting on our hands these days in the trade area. And actually, we're still quite well placed. We're still the largest exporter and importer of the world, and we're the biggest outward and inward investor taking the EU as a whole. But of course, there's no reason to be complacent. And what are we doing today to implement and to make sure that trade does play this role to the link to the world economy and to transmit that into growth and jobs is a program of bilateral negotiations. I'd like to say first that this is no longer about trading goods. I mean, it's also about trading goods, but it's much more and much more complex than trade in services, which we're talking about today. And even in trading goods, if you look at what is exported from the EU, the sophisticated goods that we export usually have about 40% of value in it, which comes from services. This is not very well known, but you cannot just export something which doesn't have a big service component these days because complex goods are made up of many, many inputs. We also think that a third of the jobs which are created through exports are actually created in the services sectors, even if it's goods exports. I think those are linkages which become more and more obvious as the global value change and the sophistication growth. So what are we doing? Obviously, we would love to do all of this in the WTO on a global scale, but we see a situation where we're strongly moving because of the lack of progress in Geneva into the bilateral area. If you look at the figures in 2006, only a quarter of EU trade was covered by free trade agreements. The rest was MFN-based WTO trade. And now, if we bring the present program to the end, we'll have two-thirds of our trade covered by free trade agreements, bilateral agreements. And we think we can get about 2% of GDP growth out of the ongoing program. We have, as you know, finished an FTA with Korea. We have now finished Canada and Singapore, which wait for ratification. But less well known is the fact that we've also done comprehensive deals with West Africa, South Africa, the SADC community, and the East African community, where I think great potential is to be found. But of course, the ongoing negotiations, by far the most important one is the one with the US, TTIP. But we're also engaging with Japan. We have an ongoing negotiation with Vietnam, Malaysia, Thailand. Some of them don't go very fast, Mercosur, and so on. So I think we're really trying to comprehensively look where the growth is and where we find partners to engage. We're also negotiating a new agreement with China on investment, which includes access to the market for investors. And we'll also have rules on capital movements, by the way. So we have a pretty big agenda out there. And what we're trying to do here, and now I'll come to services, financial services, is to level the playing field very simply. And that means two things. It means, first of all, getting rid of the market access barriers, the classical stuff that you find, capital in financial services, caps on your FDI, the licensing procedures, the closure of certain sectors for financial services companies and fund management, etc. But there are also issues here now which come to the fore, which means free flow of your data, the discrimination in taxation, some difficult issues on retail banking, which is usually a very closed sector, and so on. So that's the classical stuff on market access, if we can call it that. But we're also, of course, now in the modern world, in the more modern or more integrated financial markets, looking at the regulatory environment, and this is, I think, key in this discussion here. We've found, of course, that even if you have nice, good market access rules, it doesn't really mean that you actually can operate the way you want because of many of the regulatory behind-the-border issues that we are having. After the crisis, there were obviously two choices, either that everybody clams up and ring-fences the economy, or that we are trying to have new international rules, and that's the second scenario actually happened. But now, after the G20 has done a lot of its work, we are in the era of implementation, these rules, and now we are finding that many of these rules are interpreted quite differently in different parts of the world, and that's where the regulatory discussion comes in. Somebody has mentioned derivatives already, one of the examples, where we're trying to declinate down the international rulemaking into a consistent, coherent framework which actually allows operators to then do cross-border business. And that has been a lot more thorny than we have thought. And this is why, especially with the US, we're advocating a very strong regulatory component, which is more than just a dialogue on financial services, which is really anchored into a trade agreement, an accountable, transparent way to cooperate on the regulatory front. This is what we're trying to achieve. We're still, to be quite honest, and you can read this in the press, this is a difficult issue because there are lots of sensitivities involved. But in the end, what we really need, and that's what we think our industry and the industry on the US needs, is a consistently implementation environment with close supervisory coordination, which basically at the end allows the EU and the US companies to rely on each other's rules, which we call equivalence or substituted compliance in US talk. It's all there, you can do it, but you have to have the political will to do it. This is what we're doing not only with the US, we're also pursuing things like this with our Japanese friends. There's not much talk about that, but it's also there with other countries. And I think this is where the future in the financial services trade agenda lies.